Next in line is Blocksize Capital, please, from Frankfurt. And I think we have Jörg. The stage is yours.
Yeah, hang on. Let's quickly connect. All right. Yeah, Blocksize Capital. We're a Frankfurt-based startup. There's a bit of an echo in the connection. I'm not sure whether it's normal. Okay, so the main topic for us is connecting digital assets. Digital assets, what are those? We've all heard of Bitcoin, Ethereum, and other cryptocurrencies. These are just the tip of the iceberg. The real revolution that's behind this, and this is the forefront of finance nowadays, is that we believe that a large part of these assets, that we think that a large part of the assets in capital markets nowadays will be running on distributed ledger technology in the coming years. That means it will not only just be Bitcoin and Ethereum, but all other financial instruments that we see nowadays will be on distributed ledger technology, blockchain technology at some point. The challenge in the current environment is to enable participants in the traditional financial markets and other consumers to actually connect and to use and to handle these assets, and that is a challenge we have come out to solve. The startup was founded by Christian Lavic and Christoph Impokoven, who had an idea during the early days of Bitcoin to found a fund and to trade a fund, and then they realized that the infrastructure for trading a fund properly was not even in place. This was how the company was born, founded in 2018. Later, I joined as COO and Thomas as sales and business development head. The three major problems we are solving are, first of all, infrastructure. For digital assets, there's a lack of trading infrastructure, lack of infrastructure of storing these assets, accessing these assets, transacting these assets. And this is one of the main hurdles for many of the market participants to enter into this space. The second big problem is liquidity. There's a fragmentation of different exchanges, different assets, different procedures for onboarding and connecting to these exchanges, and so on. So this is a challenge and a problem that we are trying to solve. Thirdly, compliance. We're dealing with banks and asset managers, family offices, and they're used to very, very high standards of compliance and compliance to and in a very regulated field. So making solutions compliant and institutional grade is another big challenge that we've come to solve. How are we doing this? In terms of trading and connecting digital assets, we're operating a digital SaaS solution, digital asset SaaS solution, which we'll later see connects to different APIs to the markets, different exchanges, and enables players to almost seamlessly integrate and plug and play. We are offering an infrastructure that connects end to end from transaction in the fiat markets to storing those assets and trading them and later selling them. Everything is seamlessly integrated. What we also have is a algorithmic smart order and order router, which allows for best execution under all conditions, under all market conditions, and all of this, as we said, is fully compliant. We have three APIs that connect to markets, trading, and settlements. This is how we solve this. Now I've lost a bit of time. On the lower left-hand side, we see the client who is basically trying to access those markets. We connect in the middle to custodians and with Blocksize Core to the secondary markets and enable the customers to basically to trade. This is the business model, because you're going to ask about it. We are basically selling data. We also get a cut on the digital asset brokerage, basically on every trade that's made on the platform. And we also get revenues on how the assets are custodized and basically in the custody. Yeah, the addressable market we have this year, there are about 70 billion of assets under custody, and 0.5% are addressable through us. Yeah, and sorry. I keep hearing myself, so I got a bit confused. Yeah, great.
Thank you.
Thank you anyway. Great presentation. If I may start with the question, what in your business model, what is your assumption in 5 years' time? What is the share of traditional asset classes traded versus cryptocurrency?
We have the big specialist here in the audience or in the jury, Professor Sandner. I'm not saying something wrong, but we see that a significant part of the assets, and we see this in the legislation at the moment. We've seen a new laws to this effect, and I think we'll be on the way of seeing a significant share of assets, traditional assets, going digital. And also that new assets, newly financed, like new financing capital markets, will be done purely digital. That is fair to say, probably a 50%, and that's already quite striking. It's a huge volume.
Can I make a sequence in asset classes?
Again?
Do you see a sequence in asset classes moving?
I think, at the moment we're looking at the currencies. You saw that, with Bitcoin and other cryptocurrencies, we're already with the first application stage. Then probably now, and we have obligations, we have stocks, and we have derivatives, and I think in this order probably it will move. I'm not sure if the regulation will be this fast, but the technical possibilities are there.
But Jörg, Philip here, you're so far focusing on crypto assets only, right? Because
yes,
securities and digital securities are not ready yet for being transacted on this level. So your business right now is focusing on crypto, but it might extend to digital securities. Did I get this right?
Yes, this is correct. Essentially, the infrastructure for this is the same. Basically, these are the same rails that the digital assets in this future will run on. Crypto assets are tradable now, and they're the most available, but in the future, they'll be using exactly the same infrastructure. And this is what we're telling clients, that if they go into this area now and start with the cryptocurrencies, they'll be ready for the next step, basically the bigger asset classes as well.
Do you hold any licenses, or do you plan to apply, or are you in the application process for any?
We are currently under a tied agent model with Bankhaus von der Heydt, offering this together. So basically, we don't have the own license, but we're using a license umbrella. But we're looking at integrating our own license as well. We're currently looking at that. Yes.
The custody license, or which license is it then that you need?
No, this will be for trading, basically a brokerage license. Yes, because that will allow a complete end-to-end process. We basically will have a connection to custody, we have trading, and we're also basically we're a broker dealer as well. So
what is the impact?
So we don't need a third player in the mix.
What is the impact that you expect from the upcoming European regulation, the MiCA, with regard to your business model?
I do think that this is positive. In general, we see that that in the regulatory field, everything is moving into the direction that we've foreseen. Not as fast as we sometimes want, but I think things move in our favor because the regulator essentially says yes to the asset class and yes to the technology, but they say, but it has to be fully regulated, it has to be fully compliant, it has to be it has to be functioning just like everything else in finance. And this is what we've been building all along. We've said that if you build something in this space, it needs to be transparent, it needs to be compliant and so on, and this is what we're aiming for. So we'll see this definitely coming. The genie is out of the bottle, but there will be regulatory guidelines to follow, and those will be stricter. This is basically what everybody wants, and this plays into our hands, I feel.